Dividend yield is a financial ratio that is used to evaluate the return on investment, ROI, for a company's stock. This metric calculates the percentage of dividends paid out by the company relative to its stock price. In this video, we will explain what dividend yield is, how it is calculated, and its significance for investors. What is dividend yield? Dividend yield is a financial metric that measures the amount of cash dividends paid by a company in relation to its share price. It is expressed as a percentage and is calculated by dividing the annual dividend per share by the stock price. The dividend yield is a critical metric for investors as it shows how much a company is paying in dividends relative to the current stock price. For example, if a company pays a dividend of $2 per share and its stock is trading at $50 per share, its dividend yield is 4%. In other words, the company is paying out 4% of its stock price in dividends annually. How is dividend yield calculated? The formula for calculating dividend yield is as follows. Dividend yield equals annual dividend per share divided by stock price. To calculate the dividend yield, you need to know the annual dividend per share, which is the amount of money a company pays to its shareholders each year divided by the number of outstanding shares. The stock price is the current market value of the company's stock. Dividend yield is an important metric for investors as it provides an indication of the company's financial health and potential return on investment. A higher dividend yield generally suggests that a company is financially stable and profitable, and it may attract more investors looking for steady income streams. However, it is important to note that a high dividend yield may not always be a good indicator of a company's financial health. Sometimes, a company may offer a high dividend yield to attract investors, even if it is not financially stable or profitable. On the other hand, a low dividend yield may indicate that the company is retaining earnings for future growth, rather than distributing them to shareholders. In this case, investors may be willing to accept a lower dividend yield if they believe the company's growth prospects are promising. Dividend yield is a valuable financial metric for investors, providing insight into a company's financial health and potential return on investment. It is important to consider other factors, such as the company's financial statements, growth prospects, and market conditions, when evaluating the dividend yield. Investors should always do their due diligence and research before making any investment decisions.